So last week when I was doing my Edmonton market update, I talked about apartment condos for a while, and there was a little bit of a discrepancy on kind of what I was experiencing when I'm actually out there working, helping buyers and sellers, and what I was seeing in the benchmark pricing. So the benchmark pricing, I'll bring that up here, that's been kind of steadily going up. In April 2025, the benchmark pricing for an apartment condo in Edmonton was sitting at $214,200. And if you just compare that to the same time last year, April 2024, it was $185,800. Yet every single time I go to either list an apartment condo or I have a buyer that's looking at them, it still feels like a buyer's market. And usually when it's a buyer's market, you don't see increases in price. So I felt that this deserved further investigation. I mentioned that in the last video. I had a couple comments. People told me they were looking forward to it. So finally got around to doing a little bit of research, and I just thought I'd share that in this video. So I've already shown you here the benchmark pricing. You can see that as of April 2025, we're pretty much back at April 2015 pricing, but it was on a long downward trend. The first thing that I basically wanted to look at is what is the actual benchmark description for the apartment condos in Edmonton. So just to backtrack a little bit. So this is using the home price index, the MLS home price index. So it tracks a number of attributes, and it's meant to be a more accurate way of tracking value over time, but it does have a description. So I'm going to bring up the actual description here. So the benchmark apartment condo characteristics, the one that they actually use. So if your condo is like this, it most closely tracks the benchmark. So it's a 2-bedroom, 2-bath condo with 916 square feet. It was built in 2004 and it has underground parking. Now this is used as the baseline for the MLS home price index. So if your apartment condo is way different than that, it makes sense that you might have different results in terms of how the market's actually performed. I started digging around, doing different searches on the MLS to look at what happens if I make it an older condo or a newer one, or one that's only a 1-bedroom or a 2-bedroom. And I ended up pulling up some interesting information that helped paint a fuller picture. At least goes partway towards explaining what's actually going on in the apartment market and why I'm seeing benchmark prices going up, but even though it usually feels like a buyer's market. First off, if I only look for apartment condos that fit that exact criteria, like they were built in 2004, I gave it a little bit of wiggle room on the size. I looked like 850 square feet to like 975. 2-bedroom, 2-bath, has underground parking, year built 2004, makes it a very narrow kind of search. So I think there was something like 10 active listings, and there had been, 7 sales or something in the last 30 days. So if they're actually only tracking that stuff, it would make sense that it would show price growth, because that type of condo that fits all those characteristics is actually seeing a fair amount of buyer activity given the size of that market. I don't think they only look at it that narrow. I do think they look at all these different attributes like the size, the year built, underground parking, how many bedrooms and bathrooms, and they just sort of combine them all together to create what is supposed to be the most typical condo for the whole market. And that's kind of what they come up with. I don't think they're only looking at just apartments that have that exact characteristic. I do think there's adjustments there. I tried digging a little bit into the background and history of the home price index and didn't get a whole lot of details on that. However, what was the most useful was when I started playing around with the actual attributes myself. So that's what we're going to get into next here. So I made this little image using napkin.ai just to kind of put together some of the stats that I was looking at, and it decided to put hot air balloons in there. So it makes it a little bit fun, but I couldn't figure out how to change it. So that's what we're working with. So what we're going to compare here is absorption rates. So if you've looked at my previous market update videos, for each market segment, I always start with, is it a buyer's market, a balanced market, or a seller's market? Now, in terms of absorption rate, if it's under 30%, we would typically call that a buyer's market. If it's between 30% and 50%, we would call that a balanced market. And if it's over 50%, so like 50 to 100, that's a seller's market. So what I wanted to do is basically play around with these different attributes and see how that affected the absorption rate. So I was just looking at the last 30 days of data. So it's actually more up to date than what I had in my last video, because that was April stats, whereas I just did this a few days ago. So we were already past the midway point of May. So a lot of that already is taking into account what's happening in May. But I just looked at the last 30 days. What's the active inventory based on these attributes we're going to go through here, and how many sales were there for properties with those attributes in the last 30 days. Then I used that to calculate the absorption rate here. So you can see for just 1-bedroom units, no other criteria, just 1-bedroom apartment condos in Edmonton, I noticed that the absorption rate was at 25%, which is definitely still buyer's market territory. It's not like a super strong buyer's market because, you know, you're within 5% of being a weak balanced market, but that made a big difference. When you compare that to 2-bedroom units, so just 2-bedroom, no other attributes. I'm not saying how big it is, how old it is, if it has parking, underground parking, anything like that. Just 2-bedroom units perform significantly better than 1-bedroom units with an absorption rate of 33.5%. That already pushes it into balanced market territory, which usually you would consider pricing to be relatively stable. But I would think if you stay in balanced market territory, you're still gonna have some inflation anyway, because there is inflation. So that doesn't surprise me that much. Automatically, the fact that the benchmark description is looking at 2 bedrooms instead of 1 bedrooms tells me that it's probably mostly ignoring what's happening with the 1-bedroom units. So if you go to buy or sell a 1-bedroom apartment, that's still definitely buyer's market territory. And if you're a seller, you shouldn't be super excited about prices going up on the benchmark because it probably doesn't apply to you. Whereas if you're a 2-bedroom unit, automatically that puts you into balanced market territory and it can start to go towards explaining why we're actually seeing price growth there. Now, I wanted to get even more nuanced here. So the next section is basically looked for 2-bedroom, 2-bath units that had underground parking and were built between the years 2000 and 2010. And that bumped up the absorption rate to 38%. So now we're getting closer to being like pretty much right in the middle of the balanced market. That was the strongest performing segment that I came up with here on the fly, but it does look like it being newer, you know, 2000, 2010, and having underground parking also made a difference. So again, if you've got a 2-bedroom condo, if it's built in 1970 and has outdoor stalls or no parking, it's probably going to have a lower absorption rate and therefore not going to be seeing as much price growth. But if it's got underground parking, it's built between 2000 and 2010, then you might start to see some justification for some of that price growth. The next segment I looked at was 2-bedroom, 2-bath units with underground parking, but now I was looking for even newer units built between 2010 and after. And what was surprising is there was a significant drop in the absorption rate. So it went from 38% down to 30%, which is just 30% is literally on the cusp of buyer's market and balanced market. So you can't really say whether it's one or the other. It's just right in the middle. So that was really interesting. I wasn't necessarily expecting that because a lot of times people would assume, oh, well, newer properties will sell easier. A lot of times people have this misconception that they'll hold their value more just because they're newer and shouldn't need as much work. But that's not the case for the apartment condos, at least, with the absorption rate taking a big hit once they're built after 2010. I didn't dig into that much further, but my assumption would be that these much newer buildings are just going to be more expensive. So it could be a price thing. Once you're looking at apartment condos that were built after 2010, they are going to be more expensive than lower priced units. So they might not be moving quite as quickly, or there might not be quite as many buyers that are in that segment. There might be more buyers looking for a little bit more bang for their buck, and therefore they're willing to go a little bit older. Because you can see just 2-bedroom units as a whole, which would still technically include these 2010 plus, are performing better than the 2010 plus units with underground parking. So I'm sure more comparisons could be done there, but that does show you newer is not necessarily always better when it comes to market performance. Now, the last segment I looked at was 2-bedroom, 2-bath, no underground parking. I was basically just trying to isolate what underground parking did with the 2-bedroom units, and it did hurt it a little bit. The closest comparison to that one would be this just plain 2-bedroom units, which were performing at 33.5. So it went from 33.5 to 28.5. So not a massive swing, but that's a 5% swing, which I think would still have an impact. So it does show you that having underground parking does make a difference. And when we stacked those things, including underground parking built between 2000 and 2010, those helped bump it up. What I was trying to do is basically find what's the perfect apartment condo that will have the highest performing scenario that could justify price increases the most. I didn't show it on here, but it is actually the benchmark description itself. I do think it's a little too narrow. I could have played with it a bit more. I just had it just 2004, 2-bedroom, 2-bath, underground parking, size between, you know, what I said, 850 and 960 or something like that. That did have the best performance, but it was way too little of an active inventory for me to really give that a whole lot of, I don't know. I didn't want to put it on here because I think it would be a little misleading. When you only have like 10 or 15 active listings, like that's not exactly a big enough segment to pull insights from. That's kind of what I found here going through that, and that helped explain to me why we're seeing some parts of the apartment market that are seeing price appreciation as shown on the benchmark, whereas other parts of the market, especially one bedroom units, still feel like a buyer's market where you definitely have to price it right. You can't be optimistic in your pricing if you actually want to get it sold. So what should sellers do? Well, if you're selling an apartment condo, you should pretty much forget what the benchmark price is doing unless yours very closely matches what we're seeing with the benchmark description. You should kind of be asking yourself, where does your property land on that chart that I showed you, where we can see different segments of the market and how those are performing in terms of buyers, balance, market, that kind of stuff. But what would actually work even better is if you just reach out to me and I could do a personalized analysis for you, and I can tell you what the absorption rate is for properties like yours. And that's going to be the most accurate for you. It's not going to be as broad, and it's going to be more focused on seeing what's the real competition like in your market. So if you'd like me to do a personalized analysis for you on your apartment condo, including price analysis, just reach out to me, 780-819-5508. You can just shoot me a text at that number, or you can go to booktrevornow.com. You can select a time on my calendar and book a free 30-minute strategy call, and we can kind of just jump into it and go from there. There's absolutely no pressure to work with me. I just want to help you guys out and help you make better decisions in this very interesting Edmonton real estate market. So hope you got value out of this video, and I'll see you on the next one.